This video is episode 5 of my beginner trading education series. This video I'll be going over how to manage a trade. So I will be using risk to reward ratios to explain concepts. If you're not familiar with risk to reward ratios, you should watch the last section of my previous video because I go over them in detail there. So with proper trade management, your winners will not turn into your losers, and your best winners will be able to advance heavily without placing you at strong risk. So if you're up, a huge amount in a stock and then it snaps back and your portfolio is down 10%, that's a lot of risk. So moving on. Reduce risk, secure profits. The purpose of trade management is to secure profits and reduce risk via repeatable actions that are beneficial to performance in the long term. So you can sell, 99% of your trade at 1% profit, but that is unlikely to benefit your performance in the long run. You're not going to be making much money doing that. So let's move on to partial selling. Selling partials is very beneficial for securing profits, reducing risk, and you're not increasing the chance of your trade being stopped. So it inherently reduces the potential profit of your position, right? If you take 50% off of your size, there's 50% less profit potential. It's pretty simple. But that's the downside, right? That's the main downside, is you're reducing the potential of further profit with this action. So there are many ways to sell partials. You can sell partials in halves, thirds, fourths. Some people even sell 5% or 10% at a time, making 10, 20 actions on a stock. In my opinion, for the way I like to approach trading, the less actions, the better, right? The less room for error, the less, the more mental clarity, right? You're not having to make so many actions, the better. So I like to sell in halves, thirds, or fourths, with my favorite being halves, because then I only have to make 2 actions. So with half sells, you only worry about 2 actions, whereas if you were selling 5%, you'd have to make 20 actions. Sounds stressful, lots of room for error, and I prefer to have strong conviction in my action, like a sniper taking a shot. Sniper's just not going to keep shooting, pew, 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 pew. No, they're going to, they're going to wait until they know that this is a very, very clean action to take, a very proper action to take. Now, to expand on how partial selling effectively reduces risk and has the ability to create risk-free positions, if your trade is up 2R, okay, and you sell 50%, you've secured half of your profit and reduced your risk by 50%. So now you're only risking 0.5R because minus 1R is your original risk. And in one action, you have secured profits 0.5R and have reduced your risk to 0. So what this does, this is an amazing action, right? You can increase your overall market exposure. So you have this trade still, but in terms of your overall portfolio, you don't have any risk in this trade. You can just go and take another trade, and you have the same exact risk as you did when you first entered this trade. So you have 2 trades and only the risk of 1 trade, which is, absolutely amazing for potential performance. So there's few things more valuable to strong performance than risk-free positions. When you turn a position risk-free, you immediately have the option to enter another trade, effectively snowballing your sizing and your potential performance without increasing risk or increasing your potential drawdown. Absolutely incredible and practically an essential action to take to snowball your portfolio. So let's go to stop loss at break even. Stop loss at break even will reduce your risk to 0 while keeping your original position sizing. But this allows for reducing your risk similar to a partial sell, but the problem is with placing your stop loss at break even is you reduce the percentage chance of the trade working, right? If the trade snaps back and hits your entry point, which depending on your system, but for a fair amount of systems, is fairly probable, right? There is a fair chance of this happening. It happens fairly common. Um, so if you place your stop loss at break even, now when that happens, you will be wiped out, right? All of the profit potential from the trade is gone. Um, and you're wiped out at break even. It's like nothing happened, which can be nice, can be beneficial, but also if you do it too soon and too wrong, you severely decrease the chance of your trade working, and over the long term you kind of just shoot yourself in the foot, right? So the proper way to place your stop loss at break even is wait for a real proper advance, right? um, After it's advanced to far enough from your entry point, you can make a logical decision where it has to come crashing down to get to my entry point. Say it's advanced 15%, 20% from your entry, and the stock would have to come crashing down 15, 20%. Yeah, you'd want to be out at that point, right? So there's logical ways to do it without severely reducing your chance of trade success. So let's move on to stop loss at profit. So stop loss in profit secures profit, doesn't reduce profit potential, reduces risk to zero, but vastly reduces the potential of the trade working, right? This can be done correctly to reduce your unrealized risk without vastly reducing percentage chance of success. But it has to be done very intelligently and after a strong advance. Like I was saying, 20%, this stock would have to be up so much that you're still giving it a fair amount of room to come down and make a price consolidation without wiping you out. So stop loss at profit has the downside of you're selling into weakness, but it does secure stronger profits than a stop loss at break even, of course, right? A stop loss at break even secures no profits. So there is upsides and downsides to each of these things, as you can see from my trade management table. So let's go on to partial sell and stop loss break even. When when performing a partial sell and a stop loss adjustment at the same time, just know that you are playing with two of these boxes, right, on the trade management table. You're reducing not only your profit potential, but the chance of the trade working simultaneously. So this can be done very well, and it can be done very beneficial to your portfolio. This is one of my favorite actions to take, but if done improperly, you're going to reduce your profits, so you're only getting a small winner, and you're increasing the chance of you being stopped by a lot. So you're kind of increasing the chance of just getting small little rinky dink winners, little guys, right? Little winners, which isn't always bad, but it is something to consider, right? You're increasing the chance of that happening. So 50% off with stop loss break even is probably one of my most common actions, but I do this after the stock has advanced enough to where there's the wiggle room to not be stopped at break even, and also by securing profit, I'm kind of, like I was saying earlier, securing risk and profit to snowball into other positions, right? So it kind of feeds your portfolio and your capital a bit, keeps it healthy and strong. So yeah, if you place your if you partial sell and stop loss to break even too soon, you're increasing the chance of yourself getting knocked out by a fair amount prior to the stock making a proper advance, which can really suck. If you only secure 1R and then you get knocked out break even and the stock goes up to appreciate 10R, it sucks. I've done this myself. the stock has advanced over 3 days, I take partial profit and I place my stop loss break even just because I'm so antsy that I want to, reduce my risk and, secure profits. And then what happens is the next day, just a simple price fluctuation wipes you out. And then from that simple price fluctuation, it only goes up. It only soars, which happens, is a part of the game. But my point is, if you make the action improperly, you can do that to yourself. You can shoot yourself in the foot, take a small win when if you just left it alone, left your plan, your original plan alone, you could have secured vastly more gains. So, like I'm saying, there's downsides and upsides to each of these actions, and you have to perform them intelligently to properly capture the upsides. So now let's go on to partial sell plus stop loss into profit. This is the action that is going to reduce your chance of success the most. So if you as mentioned above, partial take profit plus stop loss break even increases secured profits even further than just a partial sell, right? But it also reduces the percentage chance of the trade working. Now, when performing a take profit plus stop loss in profit, you are securing obviously even more profits, but in turn, you are even further reducing the percentage chance of your trade working. So this is one of those actions that you're generally going to want to make only after the stock has made a crazy strong advance, right? A very meaningful strong advance to where even placing your stop loss in profit, you have strong wiggle room. And your partial sell has netted some strong secured profits, right? But if you do this too soon, man, you will get wiped out of trades so early and they will keep running up. So the thing with all of these actions is you have to be patient. You have to ask yourself, is this valuable to my plan, right? If my plan is to capture a strong move on this stock, a 50% move, then you're not going to want to increase the chance of you being stopped out. But if your plan is only to capture a 10% move, you can take a partial sell, or you can, so there's different actions for different goals. This is the important thing to realize. So moving on to stop loss at average win. This is going to be the last section and probably one of my favorite actions for strong advancers. Because I was talking about partial sell and stop loss break even. And I was also talking about partial sell and stop loss and profit. I prefer this action over both of those actions. Because if you refer to the trade management table, this only places one of these boxes into the red, right? This only reduces your percentage chance of success. This doesn't reduce your profit potential. So this is more of an intermediate trade management technique because you need to know your own trade data, which I will teach how to obtain and how to analyze in later trading education videos. Undoubtedly, I will do that probably soon. So this is one of my favorite techniques for a strong trade, which you don't want to cut early, while you secure a freaking perfect worst case scenario. So the worst case scenario is you get an average win, right? The worst case scenario is you have the win that you likely desired, right? From your edge, while you still maintain the possibility of the stock advancing and you're still in the position, right? So you don't reduce your profit potential. You secure strong profits at a logical point. This is the thing. It's a very logical point, your average win. Stop loss break even, stop loss in profit, so it's not always logical. Average win, you're securing a win. That's the whole purpose of ever entering a trade, right? Is to get your win. So securing a win while maintaining the possibility for an even greater win. This is an absolutely amazing action to take. So this is why it's one of my favorite techniques. for trade management. So yeah, you guarantee the trade is a fairly meaningful winner while maintaining the position and a small possibility of further profits, right? So you do reduce the percentage chance of your trade working by a fair amount, right? But, pardon me. So you do reduce the chance of your trade working by a fair amount, but you still have a possibility of further profits, right? And you still have your full position sizing. This is like a win on all fronts, of course, unless you're looking for a vastly greater win, like we are saying with the 50%. If you wanted to hold, until 50%, maybe you should place your stop loss break even and perform a partial sell. So every action you make in trade management has its downsides and upsides. And you have to determine which action is beneficial at each moment, not only depending on the present action of the stock, but also depending on your portfolio, right? If you haven't been having many winners, you're not going to be placing your stop loss at break even because you need to secure winners. You need to secure profits, right? So then you'll be making more of partial sells and the mixed actions. So every action is very beneficial, okay? Every single action can be done intelligently, but you need to plan and understand when to make each action. Just like, a swordsman knows when to parry and strike and advance or whatever, right? Strike at the hilt, etc. You need to know your surroundings to where you need to know which surroundings make it beneficial to make each certain action. This can get more complex, but the point of this video is just to enlighten you on risk management techniques around advancing trades. And you need to perform these techniques. This is how you will secure consistent profits and reduce your risk potential. So yeah, that's about all for my episode 5 of the beginner trading education series, going over how to manage a trade. I hope you enjoyed and study this thoroughly. Not necessarily this video, but these concepts, because you'll be making these actions forever and you need to know how to make them properly and practice them. So that's about all. Thanks for watching. If you found value, like and subscribe. Hope you guys have a good day.